Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for Tuesday, October 14th, 2025. Small caps lead the march higher, and the question becomes more and loud on the internet. Are the AI stocks leading us to a major sell-off? Again, my name is Jeffrey Scott, marketmripro@gmail.com. Google Group is Top Down Trader, and my website is marketmripro.com. This is for educational purposes only. The reason why I do these videos is to demonstrate how I can do top-down analysis with my various tools. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and bonds and options should be considered risky. You should always consult with your financial advisor before making trades, and I've got tools in many different platforms. Join my Google group. It's called Top Down Trader. It's free. Just go to Google Groups, go to all, look for Top Down Trader. Let us know how you want to be contacted. You'll get discounts on my software. You'll get invited to members only educational programs. You'll be one of the first to get an invite to my Discord site as we open that up. And plus, I'm a nice guy, and why wouldn't you want to be in my group anyways, so we can have some communication? I don't keep a mailing list. I just use the Google group. We're getting close. Probably got to lock down the total number before I go out of town. And so if you're on the fence, it's time to let me know. The meeting's October 26th and 27th. Marriott Palm Beach Gardens, 2 days packed of education, software instruction. $12.50, you get a $4 rebate towards purchase of my tools. There's both online and live options. The full service hotel is $155 a night. And I know a lot of you who are coming are also going to John Person's seminar where I'll be at Saturday, but on Friday I'll be speaking in New York at a healthcare conference. Probably lock the live on Sunday. This week I actually will be in Germany, but the internet works there too. Imagine that. But since I'll have a lot going on, I'm not sure I'll have time to do my video, so just keep that in mind. As I mentioned yesterday, the other thing is you could probably let me know for the online up into the time of the meeting. Know your news and earnings. So what will we get on Wednesday? Lots of Fed head speaking. We'll get the FOMC September meeting minutes. Now, oops, this is not this week's. I knew I did that. I forgot to save that. Ignore this slide. Hold on. When I do that, I was so prepared this week. I fixed it and I forgot to save the right file. So here you go. Is my earnings and news. So on Wednesday, we got Fed head speakers, Empire State Manufacturing, Beige Book, we'll probably get those. The sad part is Thursday with retail sales, PPI, jobless claims, Philadelphia Fed Manufacturing, maybe we'll get that. Business inventories, home builder confidence, not going to see most of those. And again, we're all flying blind, including the Fed. Today was a pretty good day for banks, especially if your name's JP Morgan, from a perspective of earnings. And you can see we've got a lot of earnings going as we're kicking off Q4 earnings season. In over the next few weeks will be packed. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. For more information about MRI, Market MRI Pro, about me, what I do, any questions for my style, indicators, or anything, just email me at marketmripro@gmail.com. I promise I won't bite. And if you own the program, have any problem with installation or anything else, Praveen is waiting idly for your calls at coding. Just kidding about the idly. Coding at marketmripro.com. Speaking of Praveen, we're probably going to upgrade servers again overnight tonight, so that should pick up the speed even more. And we already looked at that. So close that down. All right, now we're in the program. So if we look at what happened on Tuesday, it was an interesting day. If you are trading volatility, it was up 4.4%. Small caps were the champs, up 1.43. Diamonds up 0.44. Spiders were down 0.12, and the Qs were down 0.67. Interestingly, all these indexes finished at about the same place in their daily range, except volatility, which was down, and Bitcoin, which was, yeah, Bitcoin's in the same area, though it was down 2.89. So markets opened lower and gained as the day went higher. And frankly, we got the day today that I would have preferred to have yesterday. And we'll look at the charts and I'll talk about why. Yesterday got skewed because of the Trump social network tweet that he did, Truth Social, about China. If we look at the new high, new lows, we still got plenty of new lows. New highs have come down, new lows came down on both the NYSE and the NASDAQ, and at the 12-month, 52-week, 15 net new highs over new lows, 44 on the NASDAQ. So that's interesting. The NASDAQ a little bit stronger there. You could see we have less sectors up for the most part and less industry groups, and about the same amount of industry groups up. A little bit more on the S&P 1500, a little bit less on the NASDAQ, a little bit more on the NYSE. And good participation, 79% of the S&P 1500 were up. 63.2% of the NASDAQ were up and 71% of the NYSE. So overall, it was a pretty good day in the U.S. stock markets. Question is, where are we going to go from here? What led? Let's look at one-day change, rank it, make sure we got up at the top. Staples, industrials, financials, materials, and the leading tech stocks were down 1.28. Interesting that the only things that were down in the S&P 500 sectors was technology. Home builders bumped, which means rates were down. Uranium still doing well. Leisure, retail, that's something new. Telecom, transports, infrastructure, clean tech, solar has been strong for a while. Metals and minings, defense, and now we're less than 1% up. So there's clearly been rotation. Home construction's not been up near the top. I can't for a couple of weeks since the last time I said, oh, home builders look interesting. If we look at the timing model, start with the daily, no change. Now, why did I say today was what I would have liked to have seen the other day? If you look at the Russell here, it opened here. So when you see an open candle in Market MRI Pro, the default is it means it closed higher than it opened. Since the candle's white, that means not only did we close higher than the open, but we were up on the session. So we opened lower than the prior day. We closed higher than the prior day. That is a bullish engulfing pattern. And I would have to think that you could almost sound the all clear on small caps. Now, I'm still worried enough about this market that I'm not saying go all in, but I did cover my TNA today. I covered most of my contras and any shorts that I had, not to say they won't be back on tomorrow. So the Russell, much stronger. None of the bongos flipped. Same thing with the Dow. Opened lower, closed higher, just below or at the WMA. I think it's, let's see, WMA is 462 and the close is 462. Right on the WMA. Actually, take that back. 462.71. It's 18 cents above it. Bullish engulfing pattern. Bullish for a reason. Those are both bullish candles. Now, both the spider and the Qs closed above where they opened since the open candle, but they both were down on the day, so much less impressive action there. The weeklies have been in a buy, and they're not going to change, and I'm not going to necessarily have to wait for that to pop up since we already know if the dailies are improved, but I'll wait and see. And here the weekly are, and you could see the buy signals continue, as do the bongos. Still take a lot to flip the weeklies. The guppy charts, I just want to see two things if I'm bullish. I want to see the price above the moving averages, and I want to see the order of the moving averages reflect what's on the left. And right now, ooh, yellow salmon, we pretty much reflect. which means the market's holding up fine, certainly the spiders. The Russell, this is a mess because of the pullback, but it's definitely above, and the shorter ones have started to break out higher. All the guppies tell me is the markets are still healthy. If I look at the US ETFs, let's blow them up tonight, spend a little bit more time. So what did I say my target was? First target was the 17, we blew right through it. Second target was the 50. I think that you can draw a line right there. And as long as we hold above that line, it might be okay to be bullish. Isn't it interesting that this line is not a line that came out of nowhere, got close to support there a couple of times and resistance on the way up. That's the line in the sand. Now, a break below this to me is very bearish. A break below the 50, which might go a little bit above it, will be bearish as well. Look at seasonality, is going to get to be our friend very soon. What would it take for me to be really bullish on the spider and kind of sound all clear? I think I'd be trading above that area there. So right now we're in that range, but we're bouncing off the lower boundary. I'm not bearish looking at that chart. I just wish it would have looked more like the Russell. So that is the spiders. Can this go down? Absolutely, it can go down. It can also go higher. What about the Qs? Did not quite come down and touch the bottom of that line. I still think that's an important line right there. I'd like to see it break out above to know that it's all clear. Seasonality is going to be our friend soon, but pretty much held where we expect it, right at the bottom of this. Didn't get down to the 50. Closed above where it opened, and there was a down day. I would say I'm pretty neutral on this chart right here. Can it go higher? Absolutely. Can it break down? Sure, they all can. How about the diamonds? Um, the diamonds, I'd say they behave pretty nicely. Um, broke below the 50, but closed above it, or opened above it, traded below it during the day, closed right below the 17. Strong seasonality coming in, a bullish engulfing pattern. To me, that is more of a bullish looking candle than a bearish candle. Now, I used to hear, and it's probably still true, that if you take out the top of that inside bar, it's bullish. And we certainly did that today. So not bearish when I look at the diamonds, although I do recognize that the market itself is pretty heavy and there's no guarantee that we're not going to go down. So this is the diamonds. Look at the Russell, they'll probably look a lot like the diamonds. Never made it down to the 50. Bullish engulfing pattern, good seasonality, breaking out close to an all-time high. Check that, everybody. I think, let's just put on the weekly. I think we can say that despite the correction that we saw in the market, we have an all-time high today on the Russell. And not only did we see an all-time high, we also saw an all-time closing high on this, at least on the weekly chart. And let's go back to the daily chart. And I think that's going to be where we're going to see it. I think we've got an all-time high on the Russell. Woohoo, look at that, because my concern has been that we were going to do what we did the last two times we got up to a high, set the high, broke down, set the high, broke down, and here it was back here, set the high and broke down. Are we breaking out of this double top? I think it's an interesting day. So that is a really maybe a positive way to look at the Russell. The Russell's now the strongest index. Boy, have things changed in just a couple of weeks. Russell looks to me like it wants to go higher. It will unfortunately follow the market lower if this market takes a dump. Still worried about volatility. It was up today, even though the markets were, the markets were okay, except for the NASDAQ. Sort of living in this range here. I feel like it should be lower, and that's one thing that I think should be a little bit concerning. It has not come back. And then the dollar, which has been flirting with the 200, still flirting with the 200, and really nothing has changed here. And as we've talked about, it looks like the dollar's at a high, but the dollar's so off the high. If we go and we look at commodities, gold has been a maniac, and another day, another increased gold up 0.71. It's had enough of these flags on the way up that you'd expect to see another pause at some point. But the geopolitics, the inflation, the cutting of rates, the weak dollar, very supportive of gold. And gold is at all-time high. Not only is gold at all-time high, but for months I've been going back and saying, well, silver looks great, but you got to go all the way back to 2011 and the Hunt brothers. And I think we had a closing high today, if I'm not mistaken. So gold is at all-time highs. And how cool is that? I mean, silver rather at all-time highs. Gold is all-time highs as well. Pulled back a little bit today, set the all-time high yesterday, opened lower, but closed just down a little bit less than 1%. So gold and silver at all-time highs. And we're cutting rates. Oil, flirting here, been flirting here, and then dropping below the 50 and the 200. You got a death cross there. Oil doesn't look like it's going anywhere. Neither does natural gas. And not significant moves today, but a little bit lower on both the 10-year rates and the 30-year rates. And that probably explains why housing has made it back onto the list. The buckets, these are just looking at um, measurements of extension or of overbought, oversold. We were very oversold here a day ago, 2 days ago, and we've come back, it's snapped back, and it's getting more neutral, but still a little bit to the negative side here, but not no evidence of being oversold nor overbought. Market breadth, this is somewhat problematic in many ways. While I'm thinking about it, let's check market surge and get the volume. Plus 8% on the NASDAQ, plus 6% on the NYSE. So volume kind of flat, a little bit higher than normal, but not a big increase. Very different pictures. If you stand back and look at the charts, they look about the same. Big run-ups, topped, couple of sell-off days, and now working their way back, except we set up another positive in the NYSE and not on the NASDAQ. If you look at stocks above the various moving averages that turned up on both of these, um, and notice that even though it looked like it was profound how low green got, when you compare it to that April low, it wasn't very profound at all. You always have to look backwards. Um, New high, new lows, positive. We know that already. AD lines positive, up, down volume. NASDAQ doesn't look as good, which is probably part of my concerns. And you could see this looks fine with the stocks above the moving averages, new high, new lows, AD line, up, down, volume, good. And our little friend, the Hindenburg, just gave us our fourth day in a row on the NYSE. It was also positive on the HGSI. That can't be a good thing. So as much as I feel a little bit better about the market, as you know, last night futures got pretty ugly when we woke up this morning, and the market finished relatively flat, except for the Russell, which was up a lot. And the futures after hours are a little bit positive, but who knows what they'll be when the market opens. One thing gold will probably still be higher, and it's up 34 points after hours. So these bother me. I pay attention to them, but I'll look for other signs before I start unloading and going to cash. My finger's on the trigger for that. But if we were at DEFCON 4 thinking, or DEFCON 1 rather, thinking that the end was near, I'm probably at 3 or 4 right now and lightened up a lot of my contras and things that would go up if the market went down. Other thing to look at is the more advanced market breadth tool, and it should soon be ready for everybody. I created each one as a chart layout. So if you open up, let me just show you. Um, let's say, and this was just a 5-minute chart that I did on the day that the market really, you know, this was yesterday, big drop off. On Friday, gap up and didn't do much. Today, it gapped down and traded higher most of the day, at least the first 2/3, and went sideways into the close. Little sell off before the market ended. Let's say I want to change this and I want to make it something different. What I want to do is I want to put on there is my expanded market breadth for the NASDAQ composite. Click that, hit yes, and now you're going to see magic happen. I just copied, and this one takes a while to load, unfortunately. And I may have to put the IXIC in. IX, whoops, which is the NASDAQ composite. And this will load up, and I'll come back to it in a few minutes, but it will load up and should look just like this chart. And all I did was I went into this and I saved that layout. So it should be able to open up here. There's a busy layout, there's a lot of data, and this one's not cached. So we'll come back and see if that worked. Let's go into the JAS layouts. Actually, let's go back to the ratio charts for a second. What was working today? Staples turned around, discretionary looks okay, healthcare is holding up, utilities holding up nicely, tech has sold off a bit, communications came down, industrials trying to show something, maybe even materials, financials. So what do we call this chart? Well, all the things have been down turned up, and the things that were up turned down. Yes, we call that chart rotation. That's still taking too much time there. If we go to the JES layouts, this is where I do my top and bottom down analysis. We are already at 22 minutes, so let's spend about 8 to 10 minutes doing that. So 3,861 stocks made my filter. So that would be NASDAQ plus NYSE plus Amex filtered for $1 and 100,000 shares. Each one of these stocks is given an industry group and a sector. So if I go to top down, you could see all the sectors. And if I click, for example, on basic materials, there's 220 there. Now, if I want to rank it by percentage change on the day, it's financials, basics, and industrials. Okay, those are the top three. Let's go over here. Let's do the same thing. Yeah, these are misplaced stocks that are will need to be put in the right industry group. So I know that Praveen will be looking at this later. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Top 10 industry groups in the top three sectors gives me 283 stocks. I'm going to filter them for $5 and 500,000 shares, and I'm going to rank them by 2-day momentum. And AQMS was one that we looked at yesterday. Oh, by the way, I went back and I looked at the test and I was running it on 1-minute charts. It's not going to update 1-minute charts. So I put it back to daily charts and you could see you've got your same picture here that you had over on the other stock, on the other chart. So you can now build them yourself. They're pre-built. Just create whatever size layout you want. If you'd rather have it, no screener, we want 4 here. Let's open this up. Got to call it something. Test 1 or test 2. Create layout. 4 columns, and it does. We've got to decide what goes in the column. So, for example, we want this one to be the NASDAQ. So let's call that the IXIC. Pick out the spider. Put that in there, and that should load the NASDAQ composite on the daily chart. Over here, we're going to want to put in the Russell, say. I'm going to go back and redo the NASDAQ just to make sure we're okay. So that's RUT is the Russell. That should load here. I have. Sorry about that. All right, I've got the four things loaded on a daily chart. I come up here. This is IXIC. And if these aren't here yet, they're coming, which is a NASDAQ comp. Hit OK. And that should copied it into this one because that's where my fingers were. All right, highlight the chart you want to send it to, and then send it there. That's going to build that. I'm going to set it up here to build the Russell. Yes, that will build the Russell. I'm going to do the S&P 1500. Yes, that'll build the S&P 1500. This one I got to change back to the spider. I messed it up. All right, and that's set at the SPY. So now you have got the same setup that I have, and you could decide whether you want it in columns or you want it to be the way that I did it here, which I'm not sure. I think they like the columns better, so I'm going to probably go back and work on the column side. Make sure you're set at at daily time frame. The reason why it took so long to load when I tried doing it was because it was on 1 minute. All right, back to the JAS layout. So go back into my top down. Let's pick the top three again. Sorry, I got myself distracted. Financials, basic industrials. We came in here, we filtered it for 3, 5, and 500,000, hit OK, ranked it by percent return, skipped it, went 1, 2, 3, 4, 5, 6. All right, so the first one, when we ranked them by 2-day momentum, was AQMS. And the funny thing was, this came up yesterday, and this is one of these teeny weeny rare earth metal stocks. And I should pay more attention to what shows up on my scans. Gap and run today. G-Wave, another one that we looked at yesterday. We talked about how it was setting up nicely and liked what was going on here out of a squeeze. Relative strength was turning up an OBV, and it wasn't kidding. Massive move at the open. UCFI, this is a new one that looks like a buyout. We'll skip that. Caterpillar, big name, big run, breaking out, kind of getting extended. Hard for me to buy a stock where the high jumps at 100. American Express, nice pullback to the 50 and a reversal. More volume today, a CPR breakout momentum. This is what I want to see on the relative strength, breaking above the moving average, and I want to see OBV the same way. CPA, Copa Holdings, an airline. Well, Delta looked okay today. Banks look good. Here's Bank One. Like to see it above the 50. There are better. So I can go through Honda acquisition, MasterCard. Something's going on with credit cards. You know, historically, it's good to buy things when they pull back to support. This would have been a nice buy from here to here. Looks like MasterCard's doing the same thing again. So that's how I like to do top down. Identify my top sectors and then rank the industry groups. Sorry, I got detoured, but I wanted to show you and I couldn't figure out why I wasn't writing before. And it was simple. It was on a minute chart, which means it's not going to write. Let's go back into the JS layout. Let's just go to the top down side, actually out of the top down and go back to the impulse. And in that impulse list, I've got two of my favorite scans that I pre-built. One's the A plus, hit OK, and it's going to give you a big number today. So I'm going to cheat today. I'm going to drop in another scan, and I want this to be near the 50-day moving average. So I've got something here called the SMA, somewhere support at the 50. So these should be pulling back to the 50 and moving. BlackRock, you know, this is the market basically. Beautiful run off the April bottom, pull back to the 50 and a breakout today. Double dot signal, which is my favorite signal, a squeeze. Look at relative strength. Look at OBV. Um, It's not too extended to buy. I like BlackRock. CMC is another metal stock. These things are on fire, kind of a base getting ready to break out here, double dot. CX we looked at yesterday, do a nice cup and a breakout here. SGI, don't know anything about this, kind of looks like the same pattern breaking out. All of these have good relative strength, good OBV and the double dots, and then TBBK, and they're all sitting here down at the 50 for the breakout. Those look great to me. Another thing I do is my single A scan. So that was the double momentum signal. Let's go to the A. And it's pre-built the price and volume, so I don't need to do that again. Let's go back to support off the 50. Hit OK. BLK, BlackRock trigger this one. CMC trigger this one. What is even new on this one? HR, Healthcare Realty, a pullback breakout. What's the dividend? 7.39% dividend. This, healthcare REITs are typically pretty safe. This looks like a giant move between the top and the bottom. It's 3 or 4 points, which is 20%, so I won't ignore that. Pays a huge dividend. Kind of a funny looking cup, handle and a breakout. You can imagine anything you want. But that actually looks interesting. We looked at that. SVV, Savers, Value, Village, Consumer Cyclicals. Must be a cheap store. Maybe a grocery store. Breaking out sort of a flag. Not my favorite of the bunch. And then VLY is a regional bank pulling back and breaking out. People are expecting to see consolidation in the regional banks here, and that will be good for prices. So top down, bottoms up, build your own scan. So many different things you could do. Hope you enjoy this. Hope you get something out of it. I guess my parting message is I still heed the Hindi, so be careful.